So, let's talk about the future of money. Right now, there are two huge competing forces that are completely reshaping what that's going to look like. We're talking about privately issued stablecoins on one side, and on the other, government-backed central bank digital currencies, or CBDCs. And really, it all boils down to this one fundamental question. Who's in the driver's seat? Is the future of our money going to be built by innovative, fast-moving private companies, or is it going to be designed by our own governments as a piece of public infrastructure? This is the core tension we're going to unpack. And here you can see the two competing philosophies, laid out side by side. On one hand, you have stablecoins. They're private, they're agile, and they're built for global speed, because they're responding directly to what the market wants right now. On the other side, you've got CBDCs. These are public, cautious, and designed to protect national interests first. And that means every single step is incredibly deliberate and measured. Okay, so let's see how these totally different approaches tackle a massive real-world problem, financial inclusion. How do you bring banking services to the millions of people who don't have them? Both systems claim to have an answer, but their methods, they could not be more different. Yeah, and this really lays out the two strategies. Stablecoins are solving this problem from the ground up, organically. People in emerging markets are using them today to send money across borders more cheaply and to protect their savings from unstable local currencies. Now, the risk, of course, is that a foreign stablecoin, say one pegged to the US dollar, gets so popular that it actually weakens a nation's own currency. That's a phenomenon they call dollarization. CBDCs, though, they're a top-down solution. They're being designed by central banks to be a piece of public infrastructure, offering everyone a safe, low-cost way to pay, even if you don't have a bank account. All right, now let's look at how this is all playing out in the real world, because when you look at adoption, wow, the difference in pace is just staggering. One is an absolute rocket ship, and the other is more of a slow, methodical march. Just look at this number. $27.6 trillion. Let that sink in. That's the total value of transactions settled using stablecoins in 2024 alone. This isn't some small experiment. This is a massive global financial network that is operating at an incredible scale. And this chart really puts that number into perspective. The total volume of stablecoin transactions has already blown past the combined volume of payment giants like Visa and Mastercard. The takeaway here is crucial. Stablecoins aren't just coming. They're already here, and they've become a critical piece of global payment infrastructure. Now let's pivot to CBDCs. We know that 137 countries, representing pretty much all of global GDP, are exploring them. So with all that interest, how many have actually launched? Just 3: the Bahamas, Jamaica, and Nigeria. And even in those 3 countries, well, the adoption has been pretty limited. Now, this isn't just being slow for the sake of it. This cautious approach reflects the enormous challenges that major economies are wrestling with. We're talking about redesigning a nation's currency from the ground up, with massive risks around cybersecurity, citizen privacy, you name it. But, and this is a big but, this isn't just a story about technology or finance anymore. The choice between these two systems has become a new stage for geopolitical competition. We are talking about the future balance of global economic power. You see, for decades, the US dollar has dominated global finance. And now, the explosion of stablecoins, pegged to the US dollar, is basically taking that dominance and pushing it into the digital world. Other global powers are looking at this digital dollarization, led by private companies, and they see it as a strategic threat. And they are not just sitting on the sidelines. This chart really visualizes the key players in this new race. You've got the US private sector, which, as you can see, is driving this huge wave of dollar-based stablecoins. And in direct response, you have major powers like China developing their own sovereign CBDC, the ECNY, to create an independent payment system. And in a similar move, Europe is exploring a digital euro to strengthen its own monetary sovereignty and, frankly, to avoid becoming dependent on these foreign digital currencies. So where does this all leave us? Is this a battle to the death where one system has to win and the other just disappears? Well, the evidence suggests no. Instead, it looks like we're heading towards a much more complex and much more interconnected financial world. And this quote really captures the consensus view perfectly. It's not about one winner, it's about how all these different forms of digital money will eventually find their own place and their own purpose in a new blended ecosystem. So here's what that future ecosystem might actually look like.
You'll probably still have volatile crypto kind of serving as a digital gold. Then you'll have regulated stablecoins, the ones backed by real assets and playing by the rules, acting as critical payment rails. Sovereign CBDCs will exist right alongside them as a safe public option. And finally, you'll have decentralized stablecoins fueling the more experimental crypto-native corners of the economy. It's not one winning, it's all of them coexisting.
And this leaves us with a final, really fascinating question to think about. As all these different systems, private and public, centralized and decentralized, start to interact and compete and maybe even collaborate, how is that going to change our fundamental understanding of what money even is? The one thing that's for sure is that the definition is about to get a whole lot more interesting.